Bloomberg Audio Studios.
Podcasts, radio, news.
This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Massar and Tim Stenovec from Bloomberg Radio.
Now the time has come. There are things to realize.
Loving the music here, right, Tim? And so, of course, we've been talking about this all afternoon, as you all know. Fed Chair Jay Powell finally laying out what Wall Street has been expecting for a while here to cut interest rates that are coming soon to help support the economy. That marks an about face after the Fed, of course, began hiking rates back in March of 2022 after inflation, of course, spiraled to its worst levels in a generation. The economy and the U.S. stock market, though, have both come a long way since then. So let's dive into the economic as well as the investor outlook following Powell's speech at Jackson Hole this morning. Who better than to bring in then Bloomberg's own McKee, international economics and policy correspondent at Bloomberg News. And he's actually at the Jackson Hole Economic Policy Symposium here. And then, of course, Tracy Bell, Chief Investment Officer at First Horizon Advisors, joining us on Zoom from Birmingham, Alabama. Mike, I'll start off with you because you just in the last hour had that great interview with Austin Goolsbee once again. And I thought it was really interesting when he laid out sort of when people were debating about the 25 basis points versus 50 basis points in September. But he said expect multiple cuts for this year and next. So what was kind of your big takeaways from your conversation with him?
Well, we've turned a corner now. We're now out of the higher for longer regime and we are in the rate cutting cycle. The question will be, how far do they cut? They don't have an answer for that because they don't exactly know what the neutral rate is going to be. The economy growing above potential in recent years. Does it stay that way or does it fall back? Can they lower interest rates below or at least to where they were even before the great financial crisis, back what they might have considered normal? And they don't know whether they're going to cut 25 or 50 basis points. Their preference is 25. But if we got some really bad economic data, they might do 50. And that's what Austin Goolsbee said as well, without taking a position on what they'll do in September.
All right, well, maybe we can get Tracy Bell to take a position. She's Chief Investment Officer at First Horizon Advisors. Tracy, come on in here and tell us how you're viewing the rate path, at least through the end of the year, given what we heard from Jay Powell and the various Fed speakers we've heard from live from Jackson Hole.
Yeah, I love your intro music there. Time. That's what his Chairman Powell said today.
There's a method to the madness here.
Exactly, on a Friday afternoon. So, yeah, the time has come. And, you know, I think the data support that. And what Mike is saying about a slow and deliberate pace is probably what investors should expect here. Investors have been trying to price in Fed rate cuts since the beginning of the year. And we've really just now gotten to the point where the Fed is comfortable doing that. Chairman Powell talked about gaining confidence in the data, continuing to move towards the Fed's 2% inflation target, but at the same time acknowledging that the employment market has definitely cooled. And we see that in the data. So to the extent that the data continues to support that, we should expect rate cuts to follow.
So I want to follow up with you, Tracy, on that, because how are you advising clients to position at this inflection point with the Fed and a change in monetary policy? What are you telling them to buy? What are you telling them to sell?
Well, one of the things that we talk about a lot with our individual clients is expectations around transitions. So when the Fed was raising interest rates to begin this part of this cycle, we talked about transitions being difficult and understanding that transitions can lead to heightened volatility. We saw that not that long ago, a couple of weeks ago, with the Japanese market selling off and the U.S. market following, only for things to turn around and bounce right back. So we're in that same type transition environment where the data is beginning to transition to a lower pace with economic growth and a little bit weaker on the employment market, and inflation is coming down where it needs to be. And that implies that we're in another transitory environment, excuse the use of the word transitory, but transitory where we're shifting down a little bit in the growth rate. And that means that investors may have to endure a little more volatility as data continues to come out, and it's going to be lumpy. Things don't move in a straight line, and we're suggesting that investors be prepared for that. It's not time to change what you're doing. Your investment should be mirroring what your longer term financial goals are for the average individual investor, and just understand that in a transitory environment, you may experience some volatility.
Mike, come on in here because I want to talk a little bit about this line that I mentioned in our interview with Ira and Stuart a little earlier from Powell's roughly 16-minute speech a little earlier today. Here's what he said, quote, "The upside risks to inflation have diminished and the downside risks to employment have increased." In other words, they're more concerned with the risk to a rise in unemployment than they are to a rise in inflation. At least that's my takeaway. How did you view those two lines?
Well, you got it right, Tim. The Fed has been worried about inflation. It was their number one priority for 2-3 years now. But the balance of risks, as they put it, has now tilted towards unemployment rising too much. The Fed chair said that they don't think at this point that the labor market is going to produce wage inflation that would worry them. But they are concerned that unemployment could rise too much. Now, the question is, unemployment having risen to 4.3%, is that because companies are laying off workers? It doesn't appear to be that way. It appears to be a much larger labor force, more people out looking for jobs. And if that's the case, the Fed isn't going to be worried, but they'll be watching the data closely to make sure that we're not seeing widespread layoffs, which would be a sign of an impending recession.
Is that, Mike, the piece of data that they're most concerned about now moving forward?
It does appear that way. They anticipate that they're going to see inflation continue to come down toward 2%. It might be bumpy, could be goes up 1/10 in a month or something like that. But they don't seem to think there's a possibility of a breakout at this time. But they are worried about a breakout of unemployment. And Powell did say today that they'll do whatever it takes to keep that from happening.
Hey, Mike, you also, I'm sure, heard about this since you're out there, that Raphael Bostic as well as Patrick Harker were both signaling that they see the longer-term neutral rate around 3%, which was pretty specific for both of them to come out and say that. So does that mean we should expect over 200 basis points worth of cuts over the next potentially year or so?
Well, a single data point doesn't make a trend, nor do two, but if we get some more, we might think of that. I think probably the best answer is the one Austin Goolsbee gave me, which was we're going to have to wait and see, because we're going to have to wait and see exactly what the economy does. If the economy starts to slow, then you would see more rate cuts. They might be too tight, so they will continue going down, but they don't know where that neutral rate is. It was unusual that Bostic and Harker told me 3%, but most other Fed officials won't put a number on it. But it's a reasonable assumption that they could get down that low. What they won't do is go back to zero unless there's a crisis.
Hey, Tracy, come back in here, because what is positioning telling us in the stock market as far as when you're looking at the S&P 500, just a whisker away actually from its all-time high, but when you're looking at, say, derivatives markets, what does that show us as far as what investors are betting on the next couple of months or so?
You know, I think when you look at the performance of the S&P, there's a couple of things to notice, and you see this positioning more broadly. The market has been led this year up until recently by those big mega cap concentrated names within the index. But really over the past month to 6 weeks or so, that's changed. And you see a much more broad-based lift in the index coming from names outside of just those few names. You also see participation in other market caps and outside the U.S. So it's a much more broad-based participation in financial market assets moving to the upside across the board. The expectation for next year is for much broader earnings growth within the S&P sectors. So not concentrated, again, in just those few names, but spread out more broadly across market caps and sectors. That's great for investors that have diversified portfolios. And that's what we like to see, so that people aren't chasing just a few individual names.
Tracy, what about outside the S&P 500? Geographically, in terms of sectors, where are you looking for growth?
It's looking like international looks a little better this year. It's looking like that broad-based growth is going to show up really more globally, and things not be as concentrated in the United States.
Mike, I want to bring you back in just quickly here, because we still have a few data points on the calendar next week. As you know, like consumer spending obviously includes the Fed's preferred gauge when it comes to inflation with the PCE indicator. But what are you most focused on in the short term in the weeks ahead? And obviously the jobs report on September 6th.
Yeah, the jobs report is going to be the chief indicator for the Fed and contribute the most to the debate over 25 or 50 basis points. But we'll also be watching CPI on September 12th, and we'll be watching the PCE numbers that you mentioned because that's the Fed's official target. If they all come in as anticipated, I think you see 25 basis points on the 18th. And if they don't, it would take a lot to change their view and not cut. You'd have to have a big increase in jobs and a drop in unemployment. But if we see weakness, then that'll put some weight on the 50 side.
Michael McKee, international economics and policy correspondent for Bloomberg News. He's live from the Jackson Hole Economic Symposium in, of course, Jackson Hole. Also, a big thank you to Tracy Bell, Chief Investment Officer at First Horizon Advisors, joining us from Birmingham, Alabama.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Well, if you watched or attended the Democratic National Convention in Chicago this week, here's what you saw. Vintage Bernie Sanders, a screed against big pharma, big tech, big everything, and of course, billionaires. Minutes later, Illinois Governor J.B. Pritzker, who is heir to a vast hotel fortune, stood at the same spot to brag that he's an actual billionaire who's wealthier than Donald Trump. It's a moment of rapid transition from President Joe Biden to Harris. There's a party eager to woo a broad coalition. They're selling hope and joy wrapped in memes and served with a side of Beyonce's freedom. What it has avoided, though, is providing economic policy specifics that could pit one faction against another. These words from the team behind one of the most read stories on the Bloomberg terminal today. It's a dispatch from Chicago, from the Democratic National Convention. It focuses on how corporate leaders are contending with a Policy-Lite Harris campaign. Amanda Gordon is part of that team. She's wealth team reporter for Bloomberg News, and she joins us from Chicago. Amanda, good to have you with us this afternoon. I hope you've gotten a little bit of rest following a whirlwind 4 days in Chicago. One thing that I found really fascinating about the piece that you wrote with your team is kind of what happens behind the scenes when it comes to the corporate side. The United Airlines, the McDonald's, the Blackstones, the executives from some of these companies that find themselves in Chicago for an event such as this. Take us behind the scenes a little bit.
Well, in some ways you could say it's networking 101. This is relationship building and relationship solidifying. So some of the business people from Wall Street who made time to come to Chicago have been coming to conventions for years and operating in this space, and they have relationships with lawmakers. Some of them worked with Kamala Harris on her presidential run in 2019, even earlier races. So what I would say for the business people who are here and in the room that night, last night when she gave the speech, there's a comfort level with her. And I would say, they're feeling confident that they're going to get to these issues. But it is true. We are not going to hear these issues in prime time. I would just look at the optics of her speech. Thursday night was not a sort of joyful Oprah kind of night. She talked about Trump being unserious, and in her power suit up there on listing out topics from Ukraine to childcare. She really did run the gamut. But what we are hearing is that she's focusing on issues, she's naming issues that will be important to the most number of people who might influence this election on November 5th. And so we are late on some of the issues that corporate leaders and Wall Street, really care about. And that's up to us to pin her down in the coming days and weeks.
So when you were talking to people there, what were the top issues? Because there's a lot of ideas. Of course, people are going to talk about tax policy and other things like that. But what were kind of the things that people really were most focused on here?
Crypto, AI,
really?
Making America competitive, making sure that America is engaged in investing in other countries. It's not necessarily that new, but it is definitely counter to some of the things that that the Trump administration's, the Trump platform rather, has been positioning themselves. I think that the general attitude, just to be, vague myself, would be that the campaign is not going to just shut down and not listen to business, and that Kamala Harris knows how to read the room, and the room last night called for a different kind of speech. Of course, taxation, corporate tax, the idea that the wealthy will be taxed more to support some of the middle class initiatives that she presented last night is I think definitely on the table. And whereas Biden sort of leaned forward on that, she is being less specific right now about talking about those policies, because the goal in the short amount of time is to get the most number of votes, and that's the strategy. If she's less specific, Trump doesn't have the bait to attack her. So it's a political strategy. And these things are being discussed. The people are in the room, but it's not the number one priority right now.
Amanda, excuse me. Do business leaders know what they're getting with a potential Kamala Harris presidency because of the Joe Biden administration, or are they still uncertain?
Well, of course, I could point you to the piece, because one of the advantages of being here is to have some rich sideline conversations with a variety of figures. And I think what the policy advisors for Kamala Harris that we talked to said is that, yes, there is a sense of somewhat of predictability because she has been a member of the Biden administration. Where there's a break is that in some ways there was a overreaction to the notion that Obama was maybe too close to too cozy to business leaders, so there were appointments that were sort of distinctly, let's not take people from corporate America. I think she's going to be more open, and I think you can see from the speeches there that the idea is that she's going to be a leader that has a wide range. So there are going to be billionaires in the room, as there were on that stage. They're going to be representatives of unions and corporate America and activists, and it's her responsibility to listen and make the good decisions, as she says, to quote her speech, for all Americans, and that's her that's her pitch right now.
We only have about 45 seconds left, but what specific economic policies do you think she needs to be most specific with moving forward?
Well, I think that she needs to address the questions on people's mind is with the huge deficit, with the need to develop revenue, where does the money come from to put forward some of her initiatives to help the middle class, and the theory that lifting the middle class is going to help big business is a bridge that she needs to build and define.
Amanda, we're going to have to leave it there. Thanks so much for joining us from Chicago after a whirlwind few days at the Democratic National Convention. Check out Amanda's story. She's part of the team that wrote it, a great group of reporters, The Dispatch from Chicago. It's among the most read on the Bloomberg terminal. Check it out at Bloomberg.com as well. Amanda Gordon, wealth team reporter for Bloomberg News.
You're listening to the Bloomberg Businessweek podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Okay, some news in the crypto world. It's been a month since the much anticipated Ether ETFs launched in the U.S. Investors don't seem that interested, though. The 9 exchange-traded funds that hold the second largest cryptocurrency directly saw investor outflows Thursday for a 6th consecutive day. It's the longest streak of withdrawals since their debut back on July 23rd. During the same period, U.S. ETFs holding Bitcoin saw inflows daily. This is according to data compiled by Bloomberg. We've got with us the president and CEO of the publicly held Bitcoin mining company CleanSpark. Zach Bradford is back with us. CleanSpark has a $3.2 billion market cap, up around 15% so far this year. Zach joins us from Henderson, Nevada. Zach, good to have you back with us. Hey, I want to get your thoughts on why we're seeing sort of less interest in these Ether ETFs than we saw and are seeing with the Bitcoin ETFs. Why do you see this?
I may be a little biased, of course, as a Bitcoin miner, but, I think it's because of, Bitcoin, I believe, is the currency of the future. It's decentralized. It has all the benefits that come with that. Ethereum I see as, instead of a currency, I see as a platform. So its value comes down to, how people use it as a platform and all the things that get built on top of it. Whereas Bitcoin has a different sort of intrinsic value with the energy that backs it. And I think that's much more interesting to investors, of course, on a biased opinion.
Yeah, I was going to say, again, full disclosure, you run a Bitcoin mining company, but it's still interested to get your thoughts on it. You follow the entire industry. Hey, speaking of Bitcoin miners, there was a lot of concern with the halving a few months ago that it would really affect the business of miners. Talk a little bit about how it has affected or has not affected your business and how you're moving forward.
Yeah, the halving, it occurs every 4 years where the rewards that we earn as miners are cut in half. And it did have a big impact on the, entire industry. And I think what it showed is it showed the miners that prepared and were ready for the halving to occur. And, the best way to be ready for the halving was to have a highly energy efficient data centers and energy efficient servers. So on our side, we spent the prior 2 years leading up to it to build the most efficient fleet amongst the public miners, and it served us very well. And I think it's been more painful for those that didn't have the same preparations. And so, as much as we saw revenues go down because of our steps to move forward, we actually only saw revenues decrease by 7%, even though the reward itself, when measured in Bitcoin, was cut in half.
So you were just mentioning also the efficiency when it comes to the fleet and how crucial that is supposed to be. Walk us through what that would really mean when it comes to more Bitcoin and how it could be mined with less energy.
Yeah, our largest cost input is the energy that we consume that goes into our servers that ultimately drives the rewards. And so if you think of it, if you have a more energy efficient washer or dryer, you're ultimately drying your clothes with less energy. We think of it in a very simple and similar way, where it's what is the energy input that goes into that server that ultimately costs us money and leads to the outcome on the other side. And so, Moore's law has served us well in the sense that, we're seeing chip efficiencies continually improve. And so we've adopted, these new technologies. So our servers run on the latest generation chips that have been manufactured, and the energy inputs that it ultimately takes, it means it's half the energy that it took to produce the same amount of Bitcoin as 4 years ago. So that's what we've always continued to focus on ourselves, and that's what drives all the costs for all the miners.
Hey, Zach, want to get your thoughts on the election. We're, certainly the DNC front and center for us as it wrapped up last night. Speaking to a lot of our team who was there over the last few days, they were also at the RNC last month. Did you hear anything or have you heard anything from Kamala Harris's team that would make you think about her in a different way than President Joe Biden when it comes to crypto regulation?
I have not, and I will tell you, I would love to hear something. The industry, I think, is ready to engage. Bitcoin in particular should be nonpartisan, and that's what it's there for. That's what a decentralized system is there to serve best. And the fact that we're only seeing a lot of outreach and really the commentary around it in a positive way is only coming from one side of the aisle. Is making this, I think, for a lot of people, a single voter issue for this corner of the map, of course. And I think it has a big impact for, especially for individuals under the age of 35 is what we're finding. So I haven't heard anything yet. We're waiting, and I would love to hear something from that side of the aisle and also from the Harris camp that would give us some confidence on their view of the industry.
Of course, some context for our listeners here. So former President Donald Trump actually had shifted his stance when it comes to cryptocurrency to win over this new block of voters and mega donors here. So in particular, Zach, when you're thinking about this, what would you need to hear from a potential Harris administration here on the crypto side that you think would be more favorable to people who are obviously investing in that type of industry?
Yeah, I think what we're looking for is basically the call the war off is how it seems. It seems like one side of the aisle, and Elizabeth Warren in particular, has spoken up to make it a war on cryptocurrency or war even on Bitcoin. And we'd love to see instead an embrace of the innovation. But I think we need to see more than just lip service, but instead, again, embracing it, bringing it to the other side. Ultimately, if you look at what the industry is asking, the industry isn't asking for any special treatment. It's just not asking to be targeted. What we're ultimately doing is we're all running data centers, and our data centers just are used for a specific purpose. And we want to be treated the same way that, any other large scale data center, whether you're, your Meta or if you're Google, get treated. And I think that neutrality and really a promise for that would be actionable is what the industry needs to see. And it needs to be believable.
Zach, what's the data that you're seeing that shows that crypto is an important issue to voters? Our own Bloomberg opinion team, the editorial has an editorial out today that notes that just 1% of Americans, according to research and analysis from the Federal Reserve from May of 2024, say they used cryptocurrency for payment or money transfer last year.
I think that is an interesting thing to point out as payment or money transfer. I think cryptocurrency is used for a lot more, Bitcoin in particular being a store of value. Even myself, as somebody that's been involved in the industry at quite a lot of depth, I really don't use Bitcoin for anything more than a store of value. I look to other things that are easier to actually use and transact. I think that the data we're looking at on our side is that there's 50 million Americans that have at least some exposure to cryptocurrency as an investment rather than as a transactable value. You think about it, it's our retail storefronts may not be ready to accept and transact, but there's a lot of people that are invested in this space.
Do you think they'll ever be ready to transact and accept?
I think they will. One thing that we track a statistic on is about 80% of transactions right now on the Bitcoin network that are used to transact actually occur in Africa. So you think about what our industry is built on versus what their industries are built on. They need it because they have a devalued currency and they don't have access to traditional banking. So I think it'll be much slower here in the US because we have so many other options that are just easier and already built into the systems. But there are places in the world that are already using and transacting in Bitcoin at a much higher scale than we're seeing in the US.
People have talked about how there's that clearly defined maximum when it comes to the supply of 21 million coins here when it comes to Bitcoin. How does that factor into it if you're trying to have more people invest in this, but then there's limited supply? Obviously, there's other types of coins. How do you rectify that?
That's actually one of the reasons I think that Bitcoin has its intrinsic value is it's, anti-inflationary on a long-term basis. You know what it's going to be. There is no risk of another 20 million coins popping up, and you compare that to how the Federal Reserve operates, and that's where people that believe in Bitcoin, like myself, see it as a long-term store of value. The more money we print and the more we devalue the U.S. dollar on a long-term basis, it actually builds on the thesis that Bitcoin can, on a long-term basis, will hold its value longer because it's not being diluted in the same way.
Hey, Zach, as I mentioned, CleanSpark shares higher today by 6.4% as we speak. On a day like today, I'll be honest with you, I was looking as I was preparing for this. I couldn't find any stories about why the stock was surging today, but it actually puts you guys up around 15% year to date, quite a bit higher than yesterday. Why do you see in your world the stock moving higher today?
I think it's been the foundation we've laid. We've been the fastest growing Bitcoin miner year to date. We've actually doubled our production since January of this year, and we're on track to, double it again. But really, if you point it on a daily basis, Bitcoin is up because of the comments from the Fed today, and being generally seen as a risk-on asset. I think that the confidence that came in from those statements about how they're going to view rate cuts and things like that added a little bit of life into Bitcoin today, where we saw it go up a few thousand, and I think that's largely what's behind the Bitcoin miners today. But as it relates to us, we've had a great year and have a great year ahead of us.
All right, Zach, we're going to have to leave it there. Thanks so much for joining us. Always great when you come on our program. That's Zach Bradford. He is the president and CEO of the publicly held Bitcoin mining company, CleanSpark, joining us from Nevada.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Jess, Menton, and Tim Stenovec here in the Bloomberg Interactive Broker Studio. I'm filling in for the great Carol Massar this afternoon. With just under 20 minutes left to go, though, before the closing bell, Tim, we have the S&P 500 actually up more than 1% on the week. The NASDAQ 100 up about 1%, obviously boosted by these gains that we saw on the back of Fed Chair Jerome Powell and his speech earlier this morning. Obviously, him stating that this was the time to come for the central bank to cut its key policy rate and affirming those expectations that officials will begin lowering those borrowing costs soon, and clearly traders betting on as soon as next month, though. But who better to come in, and it's time for that drive to the close here. And back with us is Louis Navellier, founder, chairman, and CIO of Navellier Associates, joining us from Florida. It's always great to pick your brains, especially on a day like this, Louis, when we finally had this clear indication. But it seems like when you're thinking about the debate of 25 basis points versus 50 in September, I mean, with the clear takeaway here, because I don't think traders, at least when I was speaking them ahead of this, they thought that Powell would be just as specific and clear in the indications here. But what's your kind of big takeaways from this, and obviously the reaction overall in the U.S. equity markets?
Well, we're definitely going to get more than one cut, that's for sure. I would definitely do 50, but that signals a sign that the Fed got behind the curve. But it's obvious they're behind the curve based on market rates. So I think the most important thing that will happen on September 18th, other than the FOMC statement, is the dot plot. We'll get an updated dot plot, and we'll know exactly what the Fed's intending. But, they're going to cut on the 18th, 2 days after the election in November, and on December meeting, I expect at least three 25 basis point cuts. And hopefully it works and stimulates the economy. That Canadian rail strike is going to screw up our economy.
Talk about that.
Yeah, it's a big deal. And it's going to disrupt commerce immensely because obviously because of NAFTA, we got a free-flowing border between us and Canada. And right now, Atlanta Fed's at 2% GDP growth. So we're not hitting on all cylinders. And one of the things you heard from Jackson Hole, at least I heard on Bloomberg, was like the Boston Fed president, very worried about unemployment. And of course, we had the big downward revision this week. And so unemployment is now starting to take more priority than inflation. So that means the Fed's got to pick it up and catch up with market rates.
We did hear Jay Powell say that he is more concerned about downside to employment than he is concerned with upside to inflation. Why do you point to the downward revision that was announced by the Labor Department on Wednesday?
Well, because it's big. I mean, it means we created 2 million jobs instead of 2.9 million. And I realized they were trying to reconcile it with the tax records, and maybe some people weren't on the records. Maybe some people had 2 jobs, but it's big.
It does, Louis, it seems like markets ignored that.
They did ignore it because they expected it. And but we had 3.4% employment 15 months ago. We have 4.3 now, and we might be headed closer to 5 if they don't hurry up and do something. So let's start cutting.
How quickly, if and when the Fed cuts, do you think it will transmit to financial markets?
Immediately. I mean, it's a turbo boost for the market. I mean, there's all kinds of sectors of our economy that are suffering. I mean, the problem with studying our consumer is the consumers over 60 are fine. They have homes, they have money in the stock market, the life's wonderful. But everybody under 30 is struggling. So that's the problem. We have this two-tier economy. And, you've got a lot of problems with credit card debt and, car loans and things like that. And so the Fed might want to address that.
Hey, Louis, when some people in the markets were arguing about, well, if they went 50 basis points in September, that could signal that the economy might be slowing more than they had initially thought, and they were expecting stocks to potentially be pressured by that. But obviously, we had a boost today on it. How do you sort of rectify that? Is it more just the fact that they're willing to step in and be more aggressive to help support the economy in any way?
I think the Fed successfully engineered a soft landing, but if they don't hurry up and cut, that success is going to be a failure. As you know, most of the time they can't engineer a soft landing. So I just think that if they got too far behind the curve, they should do 50. Now that will weaken the dollar, and that they may not want to do that. But it's right now we got still a very firm dollar because we're behind all the other central banks. I mean, we learned from Jackson Hole that Canada, Britain, and the ECB is going to cut again before we do. So they're going to cut twice before we cut.
So, how are you advising clients to position then? What should they buy? What should they sell?
Well, I'm advising clients to chill out just a bit because we're overbought right now. Okay. And we might get more overbought next week with Nvidia's earnings.
So would that indicate to you as we head into September, which, as you know, historically the weakest month of the year, that could maybe, if stocks are overbought at that point, they could be more vulnerable to any sort of sell-off?
Well, let me be crystal clear. So the NVIDIA will, even if they miss, they're going to have good guidance because of the Blackwell chip. Then on the 30th, we have the PCE. It's going to be 0.1% or less. So we should rally going into Labor Day weekend. But after Labor Day weekend, we're going to consolidate. A lot of it is tax related because people have to pay their estimated taxes on September 15th. So that kind of drains some capital out of the market. And then, of course, we have the debate. We'll have some clarity after the September 10th debate. And then we'll rally from the 18th and we'll have quarter and window dressing. Quarter and window dressing is where the professional managers buy better stocks and weed them out. But the market is, the breadth and power is getting better. I'm still of the opinion it's the market's led by NVIDIA. We went from the Magnificent 7, the Magnificent 1, and 499 other stocks. And but Lilly, Novo Nordisk, I've got a lot of other stocks that are acting well. Costco's acting well. So the market's broadening out, and I have a lot of small cap stocks, but for my small cap investors, I tell them to be patient. Let's wait till after the presidential debate before we buy.
Hey, we only have about 45 seconds left. Presidential debate you mentioned, so you have me thinking politics. How could the presidential race affect markets?
Well, I'll be selling a lot of my energy stocks if Trump's going to get elected because, we're going to have a surplus of crude oil. But I might buy some natural gas stocks because that's severely depressed right now. So LNG companies, natural gas related companies, a lot of that's weather related. I also, when I'm not in Florida, I'm in the Sierra Nevada. We're having snow in a couple of days, so that's a good sign. But that's the big one I'm worried about is just how to do the energy policy. And energy is going to control this election outcome because Pennsylvania is the big state, and obviously. Biden banned LNG in January, and the courts overturned them, and now Kamala's got to mop up that mess. But Western Pennsylvania is Trump.
Louis, we're going to have to leave it there. Louis Navellier, founder, chairman, and CIO at Navellier Associates. This is Bloomberg.
This is the Bloomberg Businessweek podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.